All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, Yeshwant. Much love to you as well. Quiles, what's up? Crypto Wander, welcome up. The mods and everyone, let's smash the like button on the way in. Yes, please, guys, hit the like button. If you do get any sort of insight from the market in the stream, please hit the like button. Josh, welcome in. Samuel S., thank you for being here, man, and thank you for being the mod. Joffiel, what is up, man? It's March, and I'm back. Awesome, man. It's good to have you back in here, Joffiel. Dad87, thank you so much for the kind comments. Thank you for your support, as always. Glad to see you in here. Really happy. And Glasshopper, Warthog Thunderbolt, Party of Six, Todd, Stephanus, and Scrapper 26, Lil Rich. Thank you guys all for being here. Okay, guys, so Bitcoin is, we're still just chopping in this sideways range, and I understand this is getting boring for a lot of us, but I do think this range is coming to an end soon. If you remember, a few weeks ago, we talked about how this wave 1 to wave 2, this internal WXY running flat correction took about a week. And our wave 4 ranges can take 1 to 4 times as long as those wave 2 corrections before seeing that final breakdown, which I've been expecting in a 5th wave to the downside. First off, we have to say this price action from the 60K lows does look far more corrective than it does impulsive. And because of that, our larger bias should be that we are going to make new lows below 60K. Now, that doesn't mean that we can't get another little rise up to take out the range highs before seeing that drop to 60K, or even a rise up to even $75,200, where that 0.5 Fibonacci is. But overall, the larger bias for me personally is that this is a corrective range and that we are going to break this range down relatively soon too, because we are coming up to about a month on this in this range. We are coming up to that time where it is getting crucial, where this range might see that breakdown coming relatively soon in the next couple of days. You can see we're about 25, 26 days into this range, and we really don't want to go too much more past that 28-day mark before seeing some sort of resolution of this range. We've been also talking about how we could be looking for that fractalized version of what happened between the 80K and 96K range, this larger 3.5 month long range where we got that initial push up, kind of that grindy price action to the downside, and then that one last hurrah to a bigger level of resistance before seeing that impulsive price action come in. And overall, though, looking at this as that kind of 3-wave zigzaggy correction before seeing the bigger breakdown. And of course, all of this being part of a big complex correction. And it looks like to me that we are seeing a very similar repeat of that on lower time frames here in this smaller range from the lows of 60K. And of course, after a big crash happens, like we saw that big crash from 107K all the way down to 80K, a pretty aggressive big crash, you are going to have some time where the markets kind of reset and rebalance. And that is often when these corrective ranges form, these corrective type ranges form. After that, we saw from 98K all the way to 60K an even bigger crash to the downside. And so it is no surprise that we are seeing a corrective range form. The market is trying to find rebalance, a new fair value for the price of Bitcoin after an aggressive crash happened. The thing is, though, with this corrective move, it's complex. It's definitely getting mature here now. And I do think we could potentially see another move up. This SFP that we had yesterday it could be it, guys. It could be it. We could be in for the high yesterday. Now we're going to see a move down. But also what I have to say about so far, this dump down that we saw a couple days ago definitely looked corrective. Yes, it did end on a high amount of volume because of the geopolitical events that are happening. And the move up we've seen since then, we could say so far it looks like a 3-wave corrective move, but is there a possibility, is there a bullish scenario where we're in a couple of 1-2s here and we're about to explode up in a 3rd wave and then see some 4-5s coming in? And that, as traders, we do have to keep in mind that that is still a bigger possibility, where then we could be seeing a bigger A, B, C, and your C is a double 1-2 impulse to finish the bigger taking out the highs of the range and then the bigger drop to the downside. But what we want to focus on as traders when we're inside an established range, when we're inside an established fair value for a price at an asset, which we have been for about a month now, we just want to focus on the important levels within the range, the highs and the lows of the range, important liquidity levels and important volume levels are the biggest things to pay attention to. Now, you can also use different strategies like Fibonacci's. You can use order blocks, different things like that to find zones of confluence within the range, a time frame, horizontals. But once again, liquidity, guys. Liquidity is the biggest factor. And we did take out the liquidity from that high last week, and we did see the dump down that we saw. There's a couple ways to look at this dump down that we saw from yesterday's high. And I would like to say, first off, to me, this looks more like a 5-wave impulse to the downside. So we got our initial drop down. We rose up to that lower high golden pocket, and that is also where I shorted. I didn't short the SFP. I was waiting for a little bit higher. And then we got a bigger push down. We got that rise up. And if we look at where that rise up came, if we pull our Fibonacci retracement from the highs of wave 3 to the lows of wave 3, we turn on our wave 4 targets, you can see we pretty much rejected directly from that 0.5 Fibonacci, which is a key zone to reject in a fourth wave. After that, we dumped down and we made new lows looking at a potential fifth wave here on low time frames. We got that 1, 2, 3, 4, 5. Now, I don't like the way this fifth wave ended though, because if we zoom in even further, and it really gets messy when you go under the 15-minute time frame, but it is kind of hard. This to me looks a little bit more like a 3-wave corrective move rather than a 5-wave impulse. And in your fifth wave, you still want to see a 5-wave impulse. Sure, could we say something like a little flat in here? That's your 3, that's your 4, that's your 5, but then you would have overlap here. And so that to me is a bit of a strike against this being an impulsive move to the downside. On the other hand, we could say that this is some sort of complex correction as well. You get your 3-wave corrective move, and then you have this kind of running flat that we've been seeing in here a lot lately. That's what our bigger wave 2 that we saw a few weeks ago was, a running flat. And then you get your last 3-wave move down as well. And so if this is a corrective move, then we would expect for us to come up and make one more high. We would expect to come up and probably take out yesterday's highs and actually hit that 1-to-1 Fibonacci extinction target. Let's zoom out to the hourly chart. And yesterday in the Telegram, I was talking to you guys about this target, but if you take from the lows of the weekend to those highs, to those higher lows, and we take that 1-to-1 trend-based Fibonacci extinction, let me grab that. I guess I don't have it on the chart anymore. You can see that that's around 70,350. And we did front run that target. And our most common targets are between the 1-to-1 and the 1.236. Now, that 1.236 target is also an interesting target because we do know that we have that weakened liquidity that is sitting just above that, or just below that target, a few $100s below that target. So coming up to that 1.236, seeing a tap of that and then losing the 71K high would be a nice little short that I would be interested in taking, because remember, liquidity is the most important thing. Also, that was a weekend high, and our actual range highs are weekend highs as well. So that is my hesitation on seeing the breakdown now, seeing a bigger breakdown now and dropping this sub 60K now, is that we do still have these weekend highs intact. And also, if we look at our liquidity and we look at the last month of price action, which is pretty much how long this range has been going, we look at the important liquidity within this range, you can see that the majority of the liquidity is above us. First off, it's above our 71K highs. You can see that liquidity ends around that $71,600. 1.236 Fibonacci extinction, and then our other level of liquidity is coming up to about 72,600, 72.5, 72.6, which is above the actual range highs. And that liquidity being so close to us, it is acting as a magnet for us to kind of come up there and grab that liquidity. But let's just, let's talk about this local price action. We did bounce from that 62K. That was our major zone of support that had to hold. We did get that bounce from that support, and we did break some price action bullishly by breaking above those highs. And then we did come down and we made a higher low above those highs. So we are still technically in bullish market structure here. Bullish market structure. And we could continue in this sort of contracting diagonal that we're seeing in here. We could see a contracting diagonal to end, you know, a W, an X, and then our Y wave could be some sort of contracting diagonal in here where we could finish that Y wave in that contracting diagonal and then dump to the downside. So if we're looking at that, first off, there's a, you know, it would be nicer to see a lower high before seeing another lower low and actually hitting that support level that we talked about in yesterday's video. And that support level is just our value area low and our daily level. If we turn on our range, you can see that value area low within that range. And then, of course, we have our daily level as well. Fresh daily level right at that value area low. And it would be a liquidity grab from the dump earlier this morning, or depending on where you're at in the world, but just from a few hours ago, from, you know, 5-6 hours ago. And we are below the point of control. We have now dropped below the point of control. We are coming up for the back test now, which also happens to be right around our golden pocket. If we pull our Fibonacci retracement from the highs of yesterday to the lows that we made today, we turn on that golden pocket area. You can see that we are at the golden pocket and point of control. If we do roll over here, for the past few hours, we've been bumping up against it and trying to break it. We're not really seeing the rejection yet, but we're also not breaking through it yet. So if we start to really roll over here, then I would expect us to at least come down and make that 3-wave corrective move in here as well, before potentially seeing another rise to take out the highs locally. I will be watching for scalp longs at this daily level, but we would have to see how we're looking when we come down here. If we're coming down there and creating bull divs between earlier today's lows and the new lows, which this could be made tomorrow, by the way, guys. We could kind of chop around and not actually drop until tomorrow. And then we would have to see if we have those bull divs on the chart. Another thing I would like to talk about real quick here while we're looking at this local price action is if we look at our order flow, and we look at our order flow from yesterday's high, because yesterday's high was an important high because we did grab liquidity. And after grabbing liquidity, we fell back inside of our channel, and we fell back in, or where we rejected from the value area high of our range. And now we are below the POC, back testing the POC as we speak. And if we look at what we're seeing here on the order flow, you can see some very clear bearish CVD divergences on the chart. Lower highs in the price action. We do have higher highs in the CVD. So right there is confirmed bearish CVD divergences. But the concerning thing is that it is on a steady decrease in open interest. And what we're looking for with bearish, really with bearish CVD divergences, you're looking for bearish absorption. And with bearish absorption, you want to see that order flow, that open interest having a steady increase, because you cannot have true absorption without new positions to absorb, right? That's what whales are doing. They're taking advantage of retail. They're absorbing their positions to fill up their bags to continue the push to the downside that we would see. So a little bit concerning that this is on a drop in open interest here, but we do have bearish CVD divergences, which is a warning sign. And we're going to have to see, honestly, guys, we have to be patient and wait to see what's going to happen at this point of control and golden pocket that we're at now. If we start to even close hourly candles above our point of control and our golden pocket, then I would probably expect us to come up and take out yesterday's highs. If we start to roll over and break our market structure bearishly locally, because you can see after the initial touch of the golden pocket, which was right here, we had that drop to the VWAP. We held it. And then all day long, we've been kind of testing the VWAP, and the VWAP's been holding locally as support. As long as this VWAP is going to hold as support, then we're likely to continue our local trend to the upside now that we've flipped it back bullishly. Earlier throughout the night, lost it, rejected, made new lows. Kind of came up to it again. We front ran it, but rejected, made new lows, rejected, made new lows. So now that we've finally been able to flip it in the past 12 hours to support, it is going to be kind of our key local level. If we lose the VWAP, then we could say, hey, yeah, we started to reject. If we lose the VWAP, we are rejecting from golden pocket POC. I'm expecting new lows. If we can continue to maintain above it and maybe even coming down and bouncing off it again, seeing this kind of slow, choppy price action, but eventually closing hourly candles above the POC, then I would expect us to probably come up and at least SFP yesterday's highs into that 1-to-1 Fibonacci extinction. Okay, another scenario that I've seen on certain people talking about is our double 1-2 impulse from these lows on Saturday. And I don't like that scenario, guys, because the fact that in a third wave, let's say this was a wave 1, this was a wave 2, this was going to be your wave 3 that pushed you up. You wanted to see continuation. Generally, your third wave expands to the 1.618 or deeper to the 2.618, 2.0 Fibonacci extinction. And we didn't even quite make it to the 1-to-1. So now we have to say a single impulse is likely out of the a very improbable. This being a 1, 2, 3, 4, 5. That's pretty much out, been invalidated. But there is another scenario, a multiple 1-2 or a double 1-2 impulse, where you can get that initial push up in a wave 1, you get your wave 2, you get another wave 1, another wave 2, and then you start that big explosive push to the upside in a wave 3 before seeing kind of that grindy price action to end it. But there's also a very big problem with that. If we look at the move up here, it does look like a 3-wave corrective move. And I explained this in yesterday's video. We wanted to see another high being made into that 1-to-1 Fibonacci extinction for a nice 5-wave impulse here. But we do not have that. We do not have a 5-wave impulse. We have a 3-wave corrective move in here. And that corrective move did end on a nice high amount in volume, which is common for the end of corrective moves. So because of that, we have to have a little bit of a bias here that this entire structure up is probably a 3-wave corrective move, where now we are going to see that continuation down, or at least a continuation down to our value area low and daily level. It's just, there's a lot of chop going on right now, guys. This has really been chop city, and it's definitely a hard market to trade right now, because especially today, because we're not seeing rejection where we definitely want to see the rejection. We're not seeing a clear rejection, but we are seeing bearish warning signs, bearish CVD divergences here on the chart. But do we see bearish CVD divs on Market Cipher B or on NAMI? And if we were going to be seeing bearish CVDs, we'd want to be looking at this move up right here. And so we have to zoom in on lower time frames, because you just don't have enough time to create bear divs on the 1 hour time frame. So you have to zoom in into like the 15-minute and under. So if we go down to the 15-minute time frame and we're looking at kind of this move so far that we're seeing, this bullish structure so far that we're seeing, do we see bear divs on the chart so far? Well, Market Cipher B, no bear divs on the chart. Money flows crossing into the green. Nice little rise up in money flow here. Nice, consistent, steady rise up in money flow. So it's suggesting no, we're probably not going to get a rejection from this area. NAMI is potentially showing some bear divs on the chart, but they're not confirmed yet. And your money flow is starting to finally roll over the past half an hour. About an hour ago, it was not rolling over yet. So we're seeing our first signs. And remember, NAMI is much quicker in confirming the bear divs than Market Cipher B is. For scalping and for Chop City, NAMI is kind of a better tool to use, in my opinion. If we look at our 5-minute chart, do we see bear divs between this high and this high? The first rejection of the golden pocket earlier today. We see very slight bear divs on the chart. And if we can make one more high, maybe just piercing above the high that we made a couple hours ago, we might see a third drive of bear divs on the 5-minute time frame. But your money flow overall is still kind of coming up here. So you're starting, you want to be, against this bullish money flow that we're seeing, you want to at least have a few drives of bear div, and we're not quite having it yet confirmed, but there is a possibility of it now, but we have to take out the high from a couple hours ago. And then, of course, on NAMI, you can see we are creating those bear divs, potentially confirming a third drive of bear div as well. And the money flow has rolled over, and we do have potential bear divs in here. If we can break this high, we have some potential money flow bear divs as well. Kind of wonky looking ones. I don't like it too much. I would rather see another hump come in here that's a lower high and continue to push up to break above this local high from earlier. But we're not seeing proper confirmation. We're seeing mixed signals across the board, guys. And this, when you see these kind of mixed signals across the board, it is better to just wait for clear confirmation to take a trade. And I understand that is very frustrating because already this range that we've been in for a month has been pretty frustrating in itself. But if we're looking for the highest probability trade setups here, I did show you guys this channel yesterday. We were kind of grinding down within this channel, and I did say it does look a little bit more corrective, but after I went to bed last night, we kind of got that bigger dump down. I'm no longer really paying attention to this channel, but I do want to throw on our bigger channel. Let me get rid of that one. Here we go. And if we look at our bigger channel, we are starting to find some disrespect in the channel. For the most part, this channel was very highly respected until this last couple days of price action. So, you know, rejected on Saturday at the top of the channel. We came down to the midline. We bounced from the midline. And then now for the past day or so, we've been chopping through the channel. And if you watched yesterday's video, I said if we see kind of this three-wave corrective move and bounce from the channel, then I would be expecting to come up and take out the highs from yesterday. But if we fell back inside the channel, I would expect us to continue dropping to the daily level at least, or potentially even dropping to, you know, much lower levels. And it's just, we got a bounce to bearishly backtest the channel. Now this morning, like right when I woke up, I posted to you guys, we're in the bearish backtest now. If we reject, we can probably expect new lows. We did get that rejection. We did get new lows on the day so far after New York open. So that was kind of nice to see that. A nice little scalp short if you did take that scalp short trade there. But now we're breaking back out of the channel, and I have to say we're breaking back out pretty aggressively. And since we've broken back outside of the channel, look at here. We broke back outside the channel. We back tested it, we held it, and now we're continuing. So just a lot of mixed signals here that I just do not like to see in terms of trading and in terms of confirmations to enter and exit trades. This is not what I want to see here. If we are going to get that rejection from our POC and our golden pocket, we need to see that roll over relatively quickly. We want to see this roll over relatively quickly. And as we're rolling over here, I want to see an increase in shorts. I want to see our open interest starting to increase, and I want to see new shorts coming in. Now, we are starting to see that here, guys. You can see on our CBD, we are seeing shorts come in the past, like let's say 2 hours here. And it's not a nice, huge increase in our open interest, but it is an increase in open interest. So we are seeing shorts come in near the golden pocket. We have to be careful here because we could be seeing local bullish CVD divs against our bigger bearish CVD divergences. We could see some local bullish CVD divergences come in here. And what we're going to be looking for is this low from earlier today. We want to make a higher low above that low, and we want to continue up. So where that low is at, if we look on our order flow, let's just take a vertical line and let's throw that vertical line on that low. And this right here is where our CVD was when we made that low. So in order to make bullish CVD divergences, you want to see lower lows on the CVD, higher lows on your price action, and you want to see your open interest increasing. Now, our open interest is relatively flat, but it is a little bit above where that line was at right here. It's a little bit above, and our CVD, you can see, is a little bit below it. So we could be confirming, and let me just zoom into the 5-minute chart. Maybe we can get a better look at this here, guys. So you can see here, I guess it depends on what time frame you're on here, but yeah, all right. On the 5-minute, we're not quite below that area. Let me just throw a horizontal line right on this area here. So we need to be below this line, this blue horizontal line here. If we can get below this blue horizontal line, still making higher lows in the price action, and we want to see our open interest above this horizontal line, which I will throw right there, and we are above that horizontal line, we would see some local bullish CVD absorption. And a bullish absorption is always going to be, especially local bullish absorption, is going to always overpower the more regional bearish CVD divergences because they're on a decrease in open interest. And open interest is one of the important things you need for absorption. And absorption is a much stronger signal than just CVD divergences. So I hope that helps explain it a little bit for you guys. What I'm trying to say with this is we are potentially about to break this golden pocket and continue to push up here. It is forming very, very locally. And let me just go to the trading view and let's go into the 5-minute chart. It is forming almost this ascending triangle. So if we look at our highs, we pretty much have equal highs here, or we could just throw it to the candle body. We pretty much have equal highs here. 1, 2, 3 equal highs. And you can see we have this kind of trend line that we're following right now. So when you start to see this and you're developing bullish CVD absorption within this triangle, first of all, as far as pattern trading, the triangle has a higher probability to break to the upside. And with the bullish CVD absorption that we could be seeing on the chart, we do need to watch out for that. So during this stream, I am not taking any action until I get more clarity locally on what's happening here on the charts. I did tell you guys I did short that golden pocket around 69,525 yesterday. I did not take the SFP short because I wanted to touch the 1-to-1 before losing that. So I got in a little bit late, but I am short on that. And depending on how we move down, if we do decide to roll over here and then come down to that daily, I would potentially look for taking out today's lows into our daily and into our value area low for a scalp long opportunity. Let me check the chat. Welcome in, everybody. R Pink, thank you so much for being here, man. Welcome into you. Thank you for modding for me. The Normal Swede, what's up, man? Should we short or what? So I honestly, man, I can't say. I personally am not taking any action right now. If you did not get into yesterday's SFP of the high or the lower high golden pocket retrace, then I would, and I'm not a financial advisor, I do not give financial advice, I would personally be sitting on my hands and waiting for more clarity in this market. Because if you try to take a short right now, in some ways you're gambling because we have mixed signals on the chart. And you do not want to be shorting into mixed signals. We need to see a little bit more clarity here. Could we roll over? Absolutely, guys. We could absolutely roll over here. We are at the point of control of the range. We are at our golden pocket. And that is an area where you would expect to see the lower high come in before another lower low. And it would also kind of confirm some bearish market structure change as well. But until we start to reject, and I would say if you really, really wanted to be safe here, we still would, it would be preferable to lose the VWAP. Now, that is quite a big gap away. So I understand if you're saying, okay, wait a second, Divine Hood. If you're going to wait till we lose the VWAP to short and you're going to put your stop above today's local high and you're just going to be targeting that daily, that's not a very good risk to reward trade. And I would say you are absolutely correct there. And I would not take that trade myself. But we could look at, if we do start to lose the VWAP, you could look for the back test of the VWAP. And if upon the back test and when you start to reject, you could look for the short on the back test of the VWAP, stop going above that local high, and then you could still be targeting that daily. And then all of a sudden now your scalp trade for the day with high probability, because you've lost your local trend support for the day, you have a high probability to come down, and that is an even better risk to reward trade anyway. So you can put a bigger position size on the trade. Okay. Yeah, Dr. X, good evening, man. Welcome into Team B Willa. So good to see you here. Like button engaged. Nice to see how big your channel has grown, Divina. Thank you, Team B Willa. And guys, I really am trying to grow the channel. I actually just spoke to BYDFI today again. They sent me a really nice care package in the mail, and I really appreciate that. BYDFI, if you're listening, thank you so much for that package. Just some cool shirts, some sweaters, Stanley Cup, stuff like that. Kind of customized stuff. So I appreciate you guys so much for sending that. And they talked to me about doing a special event, a special community event. I think once I hit 5,000 subscribers, we're going to do a special kind of community giveaway or a community campaign where you guys can earn extra rewards. So that is something to look forward to here, guys. And if you want to get to that faster, maybe share the channel with someone you might think finds it interesting, and just keep sticking around and liking the video for the algorithm. So, but I appreciate all of you guys. You guys, everyone in here every single day is so kind, so supportive. So I really think we're building a great community here. Mina Gratitude. Yes, we can look at XRP in just a little bit. Big Deals Well, welcome in, my friend. Good to see you in here as always. And Mind Tapestry, you as well. Hope the business is going well for you. Patrick Schooner, welcome in. Chad P, what's up, man? John Shanks, good morning to you as well. Waiting for Turbo to go live or die. We'll check some of these coins in a bit. All right, let's see. We're starting to reject here, guys, but let's see if we bounce from this. Let's go in on low time frames here. I want to see what's going to happen, because if we start to break this down as well, I think we're going to sweep all of this. All of these higher lows that have been created, we're going to sweep them if we start to break this trend, this very local trend. And Satoshi Wizard, welcome in, man. I saw you. I tuned into Andy earlier today, and I saw you in there, and thank you for your kind comment in there as always. Really appreciate your support, and awesome that you're here. Crypto Clan World, what's up, my friend? The trademark thing you got, comment you got there, I love it, man, always. Hot Tamale, Chicken Salt, thank you guys for being here and welcome in. I got a dump target 71.2. I will go in heavy because I think we will slice 60K going for that 20K target. 71.2 is a very important area where we could reject. You're absolutely right, because once again, liquidity, guys. And what's the most important thing within this range? Liquidity. And we have that liquidity that is resting at like 70, pretty much 71,000, but you in a nice liquidity grab, you want to wick past it a little bit and then start to lose it. The wick past is to stop out all the stops that are above that high. So at $71,200 is a nice level to look for a short. Absolutely. I personally would wait for the rejection at 71.2 or around there. Maybe you even go up to 71.3 or 71.6, and then you lose that $71,000 high. That's when I would really be looking for the short on the confirmed swing failure pattern. But we'll have to see. We'll have to see what happens, because we still do have technically, guys, a few more days within this range before it starts to get, as far as time-wise, a little bit stretched out. So could we see a drop here tomorrow, you know, another rise up and kind of create that contracting diagonal, which it would kind of ruin this part of the contracting diagonal if we're looking at something like that, you know, this contracting diagonal coming in. I guess we could still look at something like that, but okay, I want to zoom in here and see what's happening on this 3-minute chart. We're getting that bounce. Yeah, we're just chopping here, guys. We're just chopping within this kind of triangle. Liam, welcome in, man. Thank you for being here. Thank you for commenting. Appreciate you being more active in here, man, and it's always great to see you. CJ, what about 57K dump and pump back to 80K levels? You don't think that's happening? CJ, I think we're going to get a big push up from 57K. I do think we could jump up to even higher than 80K, but we have to get down to 57, 58K first. So once again, on those higher time frames, guys, I am still looking for the impulse to finish. This last impulse, and let me turn off these daily levels. This last impulse from our 98K high, our rejection here at 98K. Wave 1, Wave 2, Wave 3, Wave 4, and our Wave 5. That would also end our bigger 1, 2, 3, 4 extended fifth wave So we would be ending two major impulses down here. Our daily time frame impulse, or I guess you could say even our like weekly time frame impulse to the downside, and our daily time frame impulse to the downside. So from the next major support level, major low, could we chop in here for a few days or even a couple weeks to kind of create a mini accumulation before seeing that big rise up? Yes, I do think we could see that. And I think that we could come all the way back up to 85, 86K to back test the value area low of the range that we broke down from. We could even actually come up to the POC of that range and reject from $96,000. So that is going to be something that I will be watching. But first, I want to put in that one more macro low on the chart. It is very key to end these impulsive structures to the downside before expecting a bigger rally up. So yes, 57, 58K looking pretty juicy. And depending on this next move down, guys, so we still are in this kind of, see how we had this kind of corrective phase before a big drop? We're in a smaller fractal of that. So could we see this corrective phase before a big drop? And then what we're looking for is inside of this drop here, we want to count a 5-wave impulse within itself. Now, could it be a single 5-wave impulse? Yes. Could it be a double 1-2 impulse? Yes. Could it be a contracting diagonal? Yes, because a contracting diagonal is still a motive wave. We're going to have to diagnose that once we start getting that kind of big aggressive push to the downside. I would say this, our money flow is starting to reject again here on Market Cipher B. NAMI is not so much. Actually, it's just about to cross into the green here. And that means that we could see taking out the range high before that roll over. But I want to see that big drop come in relatively soon, guys. This range is getting a bit extended now. We have only a few more days left within this range before it's kind of overpowering time-wise, this range. And by the way, time is not a hard invalidation, but it is a strong guideline. You do want there to be some symmetry between your 2s and 4s. 4s are often longer than 2s, but they're not 5, 6 times as long. That is when, once we hit the 6 Fibonacci time, pretty much for me, it would be invalidated that this is a 1, 2, 3, 4, 5. Once we hit the 6 Fibonacci time, but that's still a couple weeks away. But if we do hit the 6 Fibonacci time, then all of a sudden we're going to say, hey, maybe this was a 3-wave corrective move ending it, and now we are about to see a bigger push to the upside. But that, we have a couple weeks to determine that, to get to that really kind of do or die as far as time goes. Sudeep, welcome in. It's good to see you in here. Thank you so much for being here, as always. And Brian Woods as well, welcome in. Marius, welcome in as well. Thank you. And absolutely, you're welcome for the analysis. Crypto Grady, Gardentist, welcome in. THR Tiger, thank you guys. And Anon, thank you all for being here. Let's see. Hey, Divine, is there a reason why you use Model 3 heat maps versus the rest? Yeah, so the heat maps, I've explained this before in the past, but the Model 3 heat map kind of gives you a more direct zone where that liquidity pool ends, right? See how the lines are sharper on a lot of these liquidity pools, where it starts and where it ends. I do like the Model 2 heat map as well. But if we look at the Model 2 heat map and we go to that month-long time frame, you'll see that it's kind of more clouded. You can see all the clouds within it. So it'll give you like the smaller levels of liquidity, but it will give you the main pool, and then it kind of gives you those small liquidity. So it just gives you a clear look at where that actual important liquidity pool is. Instead of using the Model 2 and seeing like, okay, first off, in the Model 2 on the month-long heat map, for some reason, it's not showing that liquidity that's around $71,000 and $72,500, because we do have bigger liquidity above and below. So it's going to highlight the bigger liquidity. If I pull this down, let's see, you can see there is still a lot of liquidity there. Let's go actually to pull it to like the 7. You can see those liquidity pools there, but they're not highlighted on the Model 2. So for local liquidity, in order to get that kind of precise within our range liquidity, right, this sideways range for the past month, I'm going to go to the Model 3 heat map, and all of a sudden I'm going to get a much better look at where that local liquidity is, because it's zoned in much better here. And we would want to go to the month long here. You can see that it's, you got a clear look at where that local liquidity is. Now the Model 2 is going to give you more of that it's going to highlight the bigger liquidity. Even if it's farther away, it's going to highlight it in a more precise way, I guess I would say. But I switch back and forth between Model 3 and Model 2. I also use the symbol sign here. Instead of just going to a pair and looking at Binance alone, the symbol pair is what it takes, like almost all the major exchanges. It's like an aggregated liquidity heat map. So if you click on the symbol here, it's going to give you all the major exchanges, and to look at most of the major exchanges is better than to look at just one. So I would recommend you guys do use that symbol instead of the pair. And then also you want to switch back and forth between the Model 3 and Model 2 to kind of get a look at where that liquidity is resting. And it depends on if you're looking at scalps or swings, right? So I hope that answers the question to you. All right. Keto, welcome in. Real quick, thank you, R Pink, for posting that in the chat. Real quick, guys, I do want to take just a minute or two to talk about the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade in the futures markets. And they have some of the best initial deposit bonuses in the entire industry of any exchange I've seen, KYC or non-KYC. They're offering a 50% deposit bonus on $100, which is the highest I've seen on $100. They're offering a 20% deposit bonus up to $1,000, and they're offering a 10% deposit bonus up to $20,000. So if you deposit $20,000, you can get a $2,000 deposit bonus. I've also partnered with BYDFI to create that Telegram community. I try to keep you guys updated in that community throughout the day on what I'm thinking on Bitcoin. If I do see a good setup on an altcoin, I'll keep you guys updated on that. The community is free. It's a private community, but it's free. In order to get into that community, all you have to do is sign up with BYDFI using my affiliate link and then deposit $100 into the exchange. That $100 is not, you're not paying that to me. It's your money still. You're just depositing it onto the exchange in hopes that you will try out the exchange and like it enough to stay on it and use it as your primary trading platform. So if you're interested, all you have to do to get into the Telegram is sign up, deposit the $100. Once you've done that, there's a Telegram link in the description of this video. Click that Telegram link, and when you're in that Telegram verified channel, you're going to type in /verify in your BYDFI user ID, which is going to be probably a string of letters and numbers for you guys, but it's going to be next to your little character guy, and just type in /verify in your BYDFI user ID, and then you'll be in. And once you're in, you're in. Okay, second partner of the channel is NAMI Trading. NAMI is this momentum and money flow indicator that I use down here. Let's actually zoom in on the 3 minutes so we can look at our price action as we're talking about it. We do see some local bear divs on the 3 minute on NAMI. And what I'm looking for on NAMI, I use it as a entry and exit confirmation for my trades. So first I mark out my key levels of support and resistance where there's confluence on the charts as far as technical confluence. And then I'm looking at NAMI to see if we have confirmed bear divs, to see if we have confirmed money flow bear divs on the chart. And if we do, I'll take the trade. If we don't, I stay out of the trade. So it has been a great tool to help me maximize my profits, to get into good trades and to stay out of bad trades. Of course, it's not perfect and nothing is 100% probability, but I found it to be a very, very great tool for me since I've been using NAMI, and in conjunction with Market Cipher B, my profits have gotten a lot better. My profit margins, I guess you could say. So if you're interested, I have partnered with NAMI to get you guys a 50% off. If you click the affiliate link in the description, namitrading.com, and use Divine50 in the discount code box, you can get 50% off lifetime subscription to NAMI. Next partner of the channel is Blowfin, and Blowfin's a new exchange I just partnered with. They're the second non-KYC exchange that I have. So I wanted to give you guys a couple options for both non-KYC and KYC. This Blowfin, they're offering VIP 1 for the first 30 days. If you deposit just $5, you can get a $10 voucher. That's only for the first 300 users. And then they're giving some really good deposit bonuses as well. I do have to say they're not as good as BYDFI's. No one has beaten BYDFI. I've had many, many exchanges reach out to me. They don't even come close to what BYDFI is giving you guys. And I appreciate BYDFI for doing so much for our community. But you can get a 10% deposit bonus on $10,000. That's still pretty dang good, guys. So if you're interested, Blowfin, link is in the description. We also have MEXC and Bybit as the KYC exchanges. So if you are interested and you do want a KYC, those are both great reputable exchanges where you can get some discounts on trading fees. Bybit's offering up to $30,000 in future trading bonuses, and MEXC is offering a 10% initial deposit bonus up to $1,000. All right, let's get back to the TA here, and let me read the chat. And Arping, thank you always for posting these links in the chat for me, man. I really appreciate you so much. You're a fantastic mod. Thanks as always, Divine Hood. I'm so happy I joined the Telegram group. So much value added to my trading education. I appreciate you, my favorite trader. Well, Keto, thank you so much for that kind comment, man. You know, part of the reason why I keep it free is because a lot of these people that are charging for monthly discords, which I am going to do eventually, but there's a lot more involved. They'll have multiple partners in their Discord, and you know, they can be more active generally with multiple people, or they'll have people or different traders from around the world, so they can trade every, you know, session. They can trade London, they can trade New York, they can trade Japan, all these different Asian sessions, stuff like that. So, but I appreciate that, man. I do my best to keep you guys updated on what I'm thinking in there, and I do my best to let you guys know when I'm taking a trade. Now, I don't always let you guys know. You know, I entered a couple trades recently that were good risk management. So if I would have got stopped out, I would have lost my proper 1%, but they were very risky in my opinion. So if I have a very risky trade, sometimes I won't let you guys know about it, but I'm always using proper risk management, guys. No matter what you're trading, you should be calculating your plan ahead of time. And I do want to do a better job of letting you guys know about some of the altcoin trades that I take, but some of them just are so, you know, you pop on the chart, you see the confirmations as we're coming up to the alert. And of course I set alerts, guys. If you are not utilizing alerts on TradingView, I highly recommend you start using alerts. Set alerts at your levels. You know, you can click on this daily level, click it, set an alert here. And I don't even have one here, so I should do that. And we could look for a long if we have divergences. Create that alert. And if you come down there, no matter what you're doing, if, you know, you probably should have the TradingView app on your phone with the notifications turned on. And as if, you know, say you're doing something throughout the day, or you're just not, you know, eating, whatever, you're not paying attention, and you're coming down there, that alert gets hit. Now you can open up your phone, you can check your levels, you can check your confirmations. If they're there, you can look for the long. And sometimes I just don't have time to enter, and then like, or I'll be, you know, just doing other things. So I enter the trade real quick. But alerts, utilizing alerts is very, very key, guys. And it also can keep you from staring at the screen for 12 hours a day and making mistakes because you're getting bored, or you're needing some dopamine hit because you've been staring in front of a screen for 12 hours. All right. Bloody bull moon pump to 84K. Yeah, I do know we have a full moon coming, and full moons generally do give us a pump. So let's see, you know, let's see how that goes. How many more days are we talking until time's up? Well, Aeon, that's a good question. We're at about 26 days into this range, and our wave 2 range was about 7 days and 20 hours, I think it was. So let's just say 8 days. So 8 times 4 is 32. So around 32 days is when we're really going to start. I would say 31 days is when we're really going to start getting squeezed on time for this range to end. So we still have a few days left. I'm saying, when I say major move coming soon, I don't mean that's going to happen today or tomorrow, but I do think it could happen this week, or if not this week, it's probably going to happen at the very beginning of next week, or even over the weekend, because we know these geopolitical events that have been kicking off in the weekend on purpose when the markets are closed and when it has the less amount of impact, we could see a range break on the weekend. All right, my timing is crap, but if I manage to do this time, my target hits 6 and 7 hours. Okay, 6 or 7 hours from, I forget what you said there. Oh, from 71.2 to 60K? Man, that would be a very aggressive dump in 6 or 7 hours. But if it's an impulse to the downside, it absolutely can happen, especially with crypto. Yeah, thank you so much, RPink, for posting all the links in the description. So guys, Pink posted all those for you. If you guys are interested in any of those links that I talked about, any of the partners of the channel, it is just a way to help out the channel, to help the community grow. I'm trying to continue to grow the community and establish a really nice base of good traders that all support each other, that all work in cooperation to kind of dominate the market. So thank you guys for using those affiliate links if you feel called to do that. And also thank you for hitting the like button if you feel called to do that. All right, man. I have to say, guys, Bitcoin has been extremely boring and in some ways frustrating the past week or so. I think this range is relatively going to be done soon, but we do know that max pain sometimes occurs when everyone's expecting a big move and it just keeps grinding slowly sideways. And Rowie, welcome in, man. And yeah, okay, thank you, Pink. I appreciate it, man. I appreciate you. Is there an eclipse indicator? Honestly, I don't know if there's an eclipse indicator. Let's check. Let's see. Eclipse multi-oscillate. Eclipse dates indicator. It looks like there might be. Now, obviously, I'm going to have to zoom out onto like the daily time frame for this. Yeah, it looks like there is kind of a eclipse indicator. 3/3/2026, which was earlier today for me where I was at. But it doesn't show you eclipses in the future. Huh. Yeah, I'm not sure how useful that would be, this indicator, but at least there's something there now. We know that. All right, let's see this pitchfork here. Yeah, so there's a couple different pitchforks that I'm looking at, but man, this one here, once again, let me just hide this little channel. Chopping in the band, like we often do. If we could get one more low into that 57K, kind of reject here and get that one more push down, 57, 58K, have a double low at the bottom of your pitchfork. Oh boy, would that be so nice. And with bull divs, if we could see some nice bull divs on the daily time frame, that money flow starting to come up here into that support level, your anchored VWAP from the lows coming right into that pitchfork bottom. It could be such a good swing long opportunity, guys. And I will do my absolute best to let you guys know when this is coming, because this trade here, if we catch this trade properly with good risk management and get a good tight stop loss so that we can make our position size as big as possible, and this thing moves up even to, the midline or to 86, 85K, or even to the POC, which could be around your upper band up here, that could be a trade that literally makes you more money than the rest of your trades have the entire year. And of course, you wouldn't expect that to happen in 1 week or so. You'd expect that to take a couple months or, some time. But boy, could it be a good trade. Want to talk about 57K pump to 90K. Yeah, okay, so there's a few big levels. Let's just talk about when an impulse ends. So let's say you get a 5-wave impulse. In this case, let's say we're going to do a 5-wave impulse to the downside, right? 1, 2, 3, 4, 5. After any impulse ends, you're expecting some sort of corrective move. Now, could it be a flat correction and then you just continue right back down? Yes. Your most common corrective move after an impulse is to see that sharp zigzag correction to the golden pocket. And actually, let me do it upwards, because a lot of people can see that better when you're doing it to the upside, But let's say that 5-wave impulse, right? 1, 2, 3, 4, 5. Afterwards, you generally get a retracement, a corrective move to the golden pocket. Now, that golden pocket, wherever it's coming in, 0.65, 0.618, you do generally have some confluence there as far as naked dailies go, or as far as like time frame horizontal levels go. But after you get the impulse finishing, you see a corrective move to a golden pocket very commonly. So let's just talk about if we see this bigger drop from the all-time high. Remember our 5-wave impulse. Let me just go on to my Bybit chart and let's grab that impulse. This big impulse in an extended 5th wave, which is probably not done yet, but this impulse from the all-time high, once it finishes, say between $58,000 and $56,500, you can pull your Fibonacci from the high to wherever that low is going to be. And right now, I'm just going to throw it right on $57,000. We're going to throw it on $57,000. We're going to look at where that golden pocket is coming in. Now, because this is more than a 30% drop to the downside, you do want to put that golden pocket based off log scale, because we are on the log chart as well. So we'd click that. You could see a move easily to $93,000 to $95,000. Where is your anchored VWAP from the all-time high coming in? At that area. Where is your anchored VWAP from the 49K lows coming in? At that area. You know, and you could see, it's also, if you came down and you bounced from your pitchfork midline of this multi-cycle pitchfork that's been highly, highly respected, then you would expect eventually to see that move up to backtest the band area, right? Which is also going to be around your golden pocket. Or if this is going to be kind of some choppiness in here and you get like that kind of move up to your golden pocket at the bottom of the lower band, at the bottom of that band, you could see that rejection from that golden pocket. And if this is a true bear market, after that, you would expect to make new macro lows below wherever this low is. Or at least see some sort of double bottom down here, or some sort of rejection to come down to the general lows again. Maybe not make a brand new low, but general lows and stuff. So, that talking about that, I am expecting a major push up from this next low. Now, is it guaranteed the next low is going to be at 57K? No, it's not, guys. We could drop, you know, there's a couple key levels that I'm looking at, and I've talked about these on the chart before on the live streams, but 58 to 57K is a major level. Let's go back to the Coinbase chart. At 58K, we have our anchored VWAP. At 57K, we have our anchored VWAP from the bear market lows, all the way from $15,500, way down there. Very important anchored VWAP. We have a naked monthly point of control that is at $58,000, pretty much $57,889. Okay, we have a naked weekly point of control, same level, pretty much. We have a weekly level. No, weekly's at 55. Daily level in there. We have 2 daily levels also in that general area. I mean, we have so much support at the bottom of the pitchfork. Actually, there's 3 different pitchforks that kind of align. This bearish pitchfork aligns with that level. If we look at the bigger multi-cycle pitchfork, that it's been highly respected, pretty much ends at that level, $57,000. By the time we get down there, it's going to be right around $57,000. If we look at our bigger, this pitchfork's a little bit different. I'll explain this one in a second. That's the next big level I'd be looking at, is $54,000, where you can see the value area low of both these ranges combined is going to be combining with the bottom of the pitchfork. But we have some major pitchforks that are going to be aligning right around that general area, $57,000 to $58,000. And then if we lose that, I would be looking around $53,500 to $54,000 is the next major level of support. Okay. Let's check here. All right. We might be about to break this down. Let's give a couple more minutes watching this, and then we'll go into some of those altcoins. We'll go into Turbo real quick, and we can go into, what was the other one that we were looking at? Could that daily Elliott wave count be a 1, 2, 1, 2, 3 high volume double 4, 5s? Yes, it could be. Actually, what I was looking at with that, that's a very good question. So on the daily time frame, looking at a 1-2-1-2, I was initially looking at this being a 1-2-1-2, and then this your third wave, but we never got the 4-5-4-5 continuation. But we could say, yes, this is a 1-2-1-2. The one problem with that, it's a major problem, by the way. And then this being your third wave, and then we're going to see some 4-5-4-5s come in. The major problem with that is in a nested 1-2 or a double 1-2, right? When you have these, you have your primary push down, you have your retrace often to the golden pocket, you get your secondary push down, and then you get a retrace to the golden pocket again. You have overlap between the lows here and the highs here, which makes it a double 1-2. Then you get that big push down. The primary 1-2 is often longer in time and price. So you would want this to be longer in price than your second 2, and you would want it to be longer in time than your second 2. Do we see that? It's the exact opposite. This 1-2 would be way longer in price and on both the impulse and the corrective move, and way longer in time. So to see your primary 1-2 be so small and your secondary 1-2 be so much bigger, it just is very low probability. Very low probability. Also, the increase in volume we saw on this dump to the downside, your second 1-2 usually has less dump in volume on the downside. So you wouldn't want to see necessarily that. It's backwards, right? If we were looking at a 1-2, we would want this to be your primary 1-2, and then we would want this price action to be your secondary 1-2, and then you would get that big 3 to the downside. So it is technically not been invalidated, but very low probability because your second 1-2 is so much bigger than your primary 1-2. So I hope that makes sense there. But yes, it still could be a possibility. And if we're going into a very aggressive bear market, maybe that will play out. Gosh, you know, if that was going to be one giant double 1-2 impulse, let's just do a little experiment here. Let's go from the highs of 2 to the lows of your secondary 2 to the highs here. Let's throw on our 1.618. You would actually expect your third wave to drop pretty low too. This third wave would have wanted to drop pretty low. And then after that, you'd want to see your 4-5 start grinding in here. So, I mean, gosh, would we come down in one giant impulse all the way to 35, 32K? I just don't see it as very highly probable. But you know, you don't invalidate it until it's been technically invalidated. So I get that question there. Jesus Save 77, God bless you, and thank you so much for the comment, and thank you so much for being here. Let's see, Vic Surfer 618, thank you, dude. Thank you for following and thank you for joining the live stream. I'm glad to have you in here. Hey Hood, if we get time, can you look at CRCL? Huge breakout stablecoin narrative increasing. Yes. Okay. So let me go back to Bitcoin. Let me just check real quick on the low time frames. What is happening here? Okay. Starting to break that down. Let's set an alert next to the VWAP here. If we start to hit that VWAP, we'll come back to Bitcoin, but let's look real quick at some of the altcoins and Time Attack. Welcome in, my friend. No one is going to rip the Band-Aid off. Slow and painful is the way. It's looking like that, man. It's looking like that. All right. Where was the first one that we were going to look at? XRP. And I'm just going to go quickly through these guys. We're not going to spend a whole lot of time on the altcoins or on whatever we're looking at. But so for XRP, if you watched yesterday's video, I'm really just watching the range. I'm not trading a lot of the altcoins right now because if Bitcoin breaks out of the range, the altcoins are going to have some strong reactions. But on XRP, we did front run earlier today, the golden pocket, the value area low, and the naked daily point of control. So, and also this could be forming some sort of local triangle in here. I would even say a local triangle in here, or you could even make it a bigger triangle, you know, like if we come down to that golden pocket, get that bounce, and we'll get another 3-wave move up. You know, you could be forming some sort of local triangle in here, consolidating within the larger sideways range. But for me, I'm really not interested in anything on XRP. This low, if you watch yesterday's video, this low is interesting to me, coming down to that 107 level. That's the value area low of a previous range during that pump that we had in 2024, I think it was. But on the daily time frame, and let me just hide some of the stuff on the chart here. On the daily time frame, I am getting pretty interested in, if we continue to chop. You can see, first of all, we had this big sideways range that lasted a year, a very clear sideways range in here. Almost some sort of distribution range, right? This could be tap 1, this could have been tap 2, this could have been tap 3 in a model 1 distribution, and now we're in distribution to the downside. But in the drop to the downside, so focusing on just this price action here, you can see we've been dropping in a pretty steady channel. This descending channel was created from the all-time high to your lower high to the crash lows that happened on October 10th. And if we look at this channel, we are now starting to grind near the bottom base of the channel, and you're starting to see that exhaustion that you want to see. The one problem with what we saw here is this is a very, very clear 3-wave corrective move, right? 3-wave corrective move. If we take our trend-based Fibonacci extinction and we go from the lows to the highs to the lower highs, and we look at our 1-to-1 target, we did reject, let me zoom in on this and make sure I have that right. We did reject from the 1-to-1, I believe it was, okay, I guess no. It was the 618, I think it was. That 618 Fibonacci. It was the minimum extinction of the target, and then we'll put that back on log scale. So yeah, that 618 Fibonacci extinction, and in a minimum, in that 3-wave corrective move, your minimum target is usually that 618 there. We did reject right there on that 618, and if also you pull, I believe it was our 382 Fibonacci. Let's put the 382 on, and then we have to make that based off log scale. Maybe it was at 0.5. Then there was a lot of confluence. Yes, right there at 0.5 Fibonacci. Right where we rejected. I mean, so much confluence right there for that rejection, right? And it was a 3-wave move. So because this last push up was a 3-wave move, it is actually more likely that we are going to take out this low, right? 3-wave corrective move. And now you could see some sort of rise up here locally before dropping to take out that low. But inside of this range, because this started with a 3-wave move up, we are likely eventually going to take out that low. Now, on the other hand, we are at the bottom of this channel. We've been grinding and finding pretty key support. Just that crash that happened, that liquidation cascade was the only deviation of this channel. Other than that, we've been chopping at the bottom of the channel, and we have been forming some nice local bull divs on the chart. Lower lows, higher lows here. Could this give us, now that we saw some this last weekend finally with the lows that we took on Saturday, lower lows, higher lows, could we see this 1, 2, 1, 2, 3, 4, 5, 4, 5 to come up to this area? Sure, we could. Or we could be looking at this as a wave 1. We are going to get a running flat here in a wave 2, and then we get a 3. Either way, I'm looking locally now at just looking at the levels, right? When you're not sure what's going to happen, you mark out your levels of confluence where there's lots of support and lots of resistance combined together, and you look for either longs or shorts if you have confirmation, if and only if you have confirmation, right? So if we come down to this golden pocket again, and we see low time frame bull divs, 15-minute, hour and under, if we're seeing bull divs as we come down here, could I look for a long? A scalp, I would play it as a scalp at first, right? Because push up, correction, smaller push up, smaller correction. You know, we could be looking at something like that where you're getting that kind of move. But if we SFP the lows from yesterday, Monday, and even earlier today, they're kind of semi-equal lows, into your golden pocket that was front run, into your naked daily point of control that's down there, and that's also going to be your, was that the value area low? Let's see here. I can't remember now. There was Yeah, your value area low as well. So could we get that and then see a push up, you know, to either take out these highs or a wave 3 that brings you, you know, threes and you end your 4 5s up here? I am looking at, because we're grinding at the bottom of the channel, I'm looking at potentially a move up because the channel is holding. Another move up locally within this range because the channel is holding. And you're also holding the value area low for the most part. So, but you have to look for confirmations, and you want to take trades not in the middle of nowhere, right? Not right now, not in the middle of nowhere. Once you get to your boxes of support, say we drop down again to the 786. Actually, 78, I would have to say the 886 because it's going to be aligned with the bottom of the channel. At that point, it would be scary because I would suspect that you're likely to come take out this low, but we do know in sideways ranges, and this is a pretty sideways range, the 886 does give you a bounce. So with the 886 being at the bottom of the channel, if we lose this green box, that would be the only other level I'm interested in, 128.8. But overall, expecting XRP to continue dropping on macro timeframes to take out this low, based off this being a very clear 3-wave corrective move. All right, let's see here. What was the next one? It was Turbo. Okay, so on Turbo, we're kind of just grinding sideways and down still. Within this bigger channel, we can change this. Golden Pocket. Okay, our Golden Pocket now is nicely aligning with the value area high. So I like that. And it would also kind of sweep this kind of liquidity trail we got going in here. It would sweep a majority of that liquidity trail. But on the larger time frames, we're still looking potentially to come down to this area here. That's your big support level. And we marked that out last week just based off of this being a larger impulse to the downside. Let's see how did I take that? Yeah, from this area here, 1, 2, 3 came right to your 1.618. Your 4th wave corrective move. If you remember this, guys, you rejected right from your 382, right? So you have your wave 1, your wave 2, your wave 3 came directly to that wave 3 target. Your wave 4 was a 3-wave corrective move directly to its target. So now we're expecting to kind of come down to the wave 5 targets between the 1.236 and the 1.618. Could we chop a little bit more sideways in here and see a flat before seeing the drop? Yes, we could. A flat correction. So we would have to see, though, because this was a 3-wave move up here, we'd be looking for kind of a 3-wave move down and then another 3-wave move up and a WXY correction. We can't look for, because this, let me get rid of this and let me zoom in on the 4-hour. Because this initial move up in the range right here is very highly probable to be a 3-wave corrective move. 1, 2, 3. Do we see a 4 and a 5 in here? No. So we can't say that's impulsive. We have to say this is a corrective move. So now we would be looking for some sort of corrective move and then another corrective move up in a flat, getting this overall sideways range that develops in here, flat correction, before seeing the dump down in that impulse. And that last dump down does need to be an impulse, right? So we'll have to keep an eye on that. But within the local range here, I mean, honestly, I would not be interested in too much. We've taken out those lows now that we talked about last week. We've come down and we've hit the 886 Fibonacci. You hit your 886 Fibonacci, even surpassed it. And actually in a flat, your 0.9 Fibonacci is your minimum target for a flat. We've hit the 0.9 Fibonacci. So you could say that this is already 3-wave corrective move in a W, corrective move in a X, and then could we get one more push up in a Y? But you do want to see more commonly to take out that high, but it doesn't have to. It could reject from a golden pocket. Knowing that the golden pocket is at the value area high of the range, that would be an area where I'd be very interested in the short. Short this golden pocket to come down to this green box. Other than that, I'm not interested in anything else, guys. You could pull a channel here. You could look at your kind of trend. This channel, you're chopping down in this channel. So it does look kind of corrective of the past few days. Chop, 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 chop. You know, maybe we're going to come up, reject from the top of the channel before coming back down to the bottom again. I'm not interested in any of that, especially on a low liquidity coin like this. But that's what I'd be looking. Mark out your important levels, your important naked daily points of controls within the range. So you could come in and turn on your important naked daily points of controls in here. You do have quite a bit of them, actually. I do like this naked daily point of control in particular because there is liquidity above it. And remember, what are the most important things in the sideways range? Liquidity and volume. So you have a naked daily point of control, which is a volume level. You have a liquidity level into that volume level of resistance. And you have your value area high and golden pocket just above that. So that to me is looking like a very juicy level. Now below us, you do have a naked daily point of control that's right next to these lows. So could you wick past the naked daily to grab that liquidity and close the hourly candle at or above this naked daily point of control? Absolutely. So I would be interested in this naked daily point of control here. And then let's look at our naked weeklies just really quickly here. Yeah, nothing too much in here. This naked weekly. Okay, so. But that's what I would be looking at, guys. Okay, let's go. Oops. What was that other one? We were just going to look at. Circle. Wow, we're breaking out of the bearish pitchfork here, and it's pumping pretty aggressively. Let's get rid of some of this. Now, remember how we hit that 886 there? And we were getting the bounce up, but I said because we hit the 886 of this sideways range in a larger downtrend, we were likely to take out this low. We did take out that low. Because you made a small move up, but you're still in your bigger bearish trend. Because you hit the 886 here, you're likely to eventually, sooner rather than later, take out that low. We did do that. So that's why that 886 was there on the chart. You're breaking out of your value area high here. You rejected, bounce from POC, you're breaking out. So because we're breaking out of the value area high, now we're going to want to look at, and we're also breaking our bearish pitchfork, we're going to want to look at those key levels. Let's go to from this high to the low, golden pocket, and we're going to put that based off log scale. We're coming right into your golden pocket now. Watch, be very careful for a rejection from here. If you reject here, I expect us to at least back test that value area high that we just broke out of at $90 pretty much. So reject here, come down to 90. If it holds, you might see another local move up to continue the uptrend. I don't like, okay, let's zoom out to the daily time frame here. It does look like this could be a nice impulse to the downside, right? Ooh, or, you know, because if we have our highs, you could be looking at a 1, 2, 3, 4, 5 completed impulse, and then this is going to be a flat in here. So you A wave, your B takes out the lows of your A, your C takes out the highs of your A, and then you could continue right back down here. So I would be careful for that rejection from here. Let's see if our flat targets were hit. So let's pull our Fibonacci extinction here, and let's go between the 1.236 and the 1.382. I'm just going to do this. You surpass that. Okay, so that's let's look at our 1.618. Did we surpass the 1.618 extinct? Yeah, we even passed the 1.618. So it's pretty aggressive for a flat, to be honest. That's pretty aggressive for a flat. Honestly, that's a pretty hard count. We can't really count a double 1-2 in here. 1-2, 1-2. Once again, your primary 1-2 is a lot shorter than your secondary 1-2, but also that would be your 3. You'd get the 4, the 5. You don't have another 4-5, so you can't count a completed impulse in there. I mean, the only thing we could say is that this is an expanded flat correction in here. You had to have your 1, 2, 3, 4, 5. Now you did surpass the targets there a little bit. But could this be an expanded flat where then we roll over? Either way, I would be looking at, you're at your golden pocket, a pretty key golden pocket here, pulled from that last major high down to your lows. You're at that log golden pocket. And you also, let's look at our naked weekly points of controls. You do have a naked weekly just above you. And that's also going to be where your non-log golden pocket is resting around. Daily level is also going to be up there. That daily order block is right there on that naked weekly point of control. See that daily order block right there, which is also a daily level resting right pretty much into that naked weekly point of control, and your golden pocket's just above that. Now, the proper golden pocket pull is this one. That's the proper 61.8% retrace. I actually do like if you see how there's these 2 green candles smashed in between a bunch of red here. So that is still an order, that's going to be like a 2-day order block right there. Very nice 2-day order block at your golden pocket. So you're definitely at a level of resistance in here. Money flow looks pretty good, just crossing into the green, pretty nice into the green here on NAMI. And let's just go to that 2-day time frame. Actually, it's not a 2-day order block. You filled this gap. Not much of a gap. Yeah, filled that gap there. I want to check our weekly really quickly. Yeah, and you did fill this nice fair value gap that was created on the weekly, but you still have one right up here above you too. Nice fair value gap here. And even this guy here. Let's pull our Fibonacci from the highs. Let's just say that this was an impulse here that ended here, right? Impulse ended there. That golden pocket's going to be important because it's right above that liquidity, but then let's pull it actually how the algorithms pull it. The bots pull it like that from a swing high to a swing low. They don't care about Elliott waves. So if you're looking at the way the bots would pull this, that golden pocket at 160 is going to be so freaking important. You have SFP right into the macro golden pocket right there. And I'm sure we have some sort of high time frame naked point of control in that general area. Yep. Naked monthly point of control in that area as well. So this level, if we get up here, and I own some circle. If we get up to that area, I might be interested in selling some of it. But the impulse that we're seeing in the past couple days is pretty interesting. This is definitely impulsive price action in here. Last couple of weeks. Let's see, you have overlap between this high and this low. So could you say it's a double 1-2 impulse? 1, 2, 1, 2. You're in your big third wave now. Okay. Do we get some 4 5s coming in here? But this definitely looks impulsive. I would want to see some selling exhaustion starting here. Until I'm not, even though we're at the golden pocket, I'm not looking for the short. Unless you're scalp shorting it, right? You're at the golden pocket, you're scalping it for a wave 4. A little small pullback in a wave 4. Sure, you could look for that. But as far as the bigger swing short goes, I'd be waiting until we finish this impulse here. Guys, give me just a second. I'm getting a phone call. I'm gonna put it on mute real quick. I have to answer this. Give me just a second. All right, guys. I am really sorry to do this, but I have to end the stream. I have to get going. I kind of have I don't want to say an emergency. I don't want to concern you guys, but I have to get going here. So I'm really sorry about ending the live stream right now. I know we didn't get to cover as much as we wanted to cover. Let me take 10 seconds, 20 seconds to look at Bitcoin here. Just remember what we talked about, right? Look at if we can break above our POC and our golden pocket. I would be expecting to take out the highs into, you know, either 70.350 or even 71.6. Look for the liquidity grabs. Remember, sideways range. Look for the liquidity grabs. Also, if we start to lose the VWAP, I expect us to come down to that daily. SFP of the lows into the daily, into the value area low where we could look for a scalp long. But I'm really sorry about this, guys. I do have to get going. I will be live again Thursday and Friday, 2 p.m. Eastern Standard Time, and I will try to make this up to you. Maybe we can do an extra long live stream on Thursday or something. But I'm really sorry, guys. I do got to get going. Thank you all so much. Please hit the like button on your way out, and I will see you next time.